We are witnessing the age of transformation. Technology is having a huge influence on traditional companies which have traditionally grown through increasing their global footprint, larger workforces, very much focused on infrastructure. Now they're needing to transform and change themselves and engage in acquiring technology that they have not been able to build internally.
Technology is affecting everyone. Every company is trying to make their businesses more efficient. So in the sense, everybody is changing their business models. Therefore, traditional businesses may no longer exist.
So the manufacturing industry has evolved. Part of the nature of how you evolve is you adopt the latest technologies. The traditional manufacturing industry is still the traditional manufacturing industry in that it's making widgets, but it's using software to make those widgets more efficient. M&A is a very important part of Emerson and our culture. It's always much faster to acquire the company because that company brings the expertise of that particular technology.
A lot of the industrial companies are very much focused on how do they acquire technology to either add into their own existing infrastructure and therefore increase potential market share, or they're buying technology so that it can be a disruptor in the market.
I think the US is still the biggest source of new disruptors. Some ideas are coming out of places like Europe, Germany or Japan, but not in the magnitude that we have been seeing in the US.
We're seeing two types of deals. On the one extreme, you've got the mega deals, the billion-dollar plus deals. On the other end of the spectrum, we're seeing sort of much smaller, more technology play deals where industrials are acquiring a small piece of technology, an IP, a software, or they are buying a workforce, so they're buying the people, the innovators. And that's resulted very much in a slowdown, I think, in the mid-market.
Finding those good middle market companies are really an advantageous method to grow and improve your customer solutions and your financial contributions. They're more impacted by what's going on in the economy, in the ambiguity of the markets, because they're more hesitant, I think, to put themselves up for sale than smaller companies who may need the cash, like the startups. There may be a view that middle market companies are losing out, but I think there are great opportunities for M&A.
The pace of due diligence and hence the pace of M&A has increased very, very significantly. There may be significant risk going forward in terms of M&A business.
What we will see is a longer time period for deals to get done and an increased focus on how you navigate the complexity of regulation. But I still think M&A, tech, industrials, that's where my money's at.